right, welcome back to the SteadyTrade Podcast, everyone. Back with Matt McCall. I am Tim Bohen. So as requested, and as I mentioned in last week's episode, hey, we're back to penny stocks, baby. Okay, so listen, for many reasons. One of the biggest reasons is I have, many of you that have followed the YouTube, or you follow me elsewhere. I've been calling this the summer of penny stock love, okay? And I started calling it that when GME started popping off, and, around GME and AI, and then, Bitcoin's kind of chopping around right now, but, I'm kind of going back to a month ago, and I'm just like, man, this sure feels like 2020. GameStop's back, AMC's back, Bitcoin's, again, it's kind of chopping around now, but a month ago was going crazy. And then you're just seeing the velocity of these small caps. And I'm going to mention some of the recent ones and what we're looking for in the future. But, we're back. It's like 2020. And when I say that, there's always a runner every day. But what we've started to see in the last month is the velocity of the moves. We're not talking 30%. We're talking 300%. Like I'll touch on LUCY later. LUCY. Stock went up 340% in one day. And we were all over it. Like, our algorithm identified it. We saw the press release. We're like, whoa, this thing is the one. And by noon that day, it'd gone up 334%. Now, you go back a few months ago, like spring was kind of slow in small caps. And that same stock with the same press release, now I can't prove this, but in my opinion, it would have been a spiker. People love the AI news and all that. But it probably would have been like a 30, 40, 50% spiker. And that stock's still hanging around to this day. So that's why I wanted to bring Matt in, because I know he's done some research on this. And the big catalyst for this episode, I mentioned at the end of last one, was, you're starting to see what I call the real money. Okay, like Stanley Druckenmiller selling his Nvidia because he's like, I want to get in, the IWM, the small cap index. And I'm just like, whoa, that's... Because, most of you know that have followed podcasts for a while, I joke, but penny stocks are mostly for degenerate gamblers, okay? Now, if you have risk management, if you know how to write a trade plan, if you know how to chart, they're the best to day trade. Listen, Apple's been on an amazing run, but it moves 2% in a day. Good luck day trading Apple. You're never going to make any money. So, and that's the other thing I love about penny stocks is it's mostly undisciplined, lazy, hungover, possibly still drunk people from the night before. That's who you're competing against. So that's what I love about penny stocks is if you can have risk management and a trade plan, you're competing against arguably the dumbest and laziest people in the stock market. So you can find an edge there. They love to chase stocks up and use market orders and all this terrible stuff, and you can capitalize on that. So, and last point before I kick it over to Matt is, listen, I can't stress this enough. When I look at reading the tea leaves in the small cap market, it's almost like a time machine, like going back to 2020. The velocity of the moves, the volume. We're seeing, 1 billion shares traded a day in these small cap stocks. I think back to when I got started, we'd see 10 to 20 million in a day and it'd be a big deal. You got billion shares traded in some $2 stock, and that's routine. That happens every day. And in my opinion, and that's why I wanted Matt to touch on this, is that's what I call the real money. This isn't some, college kid with a $500 account moving these stocks. That is, in my opinion, the big money coming into the space.
Yeah, you make a great point. That's not normal retail investors. That's big players moving that around. That's hate to say it, but that's the truth.
Yeah, a lot of people and for education for the viewer, a lot of people think that there's millions of small cap traders. There's no way to real quantify it. But in my opinion, you're talking about a few 100,000 people. And these people, a lot of them aren't trading every day. So it's like a lot of you are. I'm sure a lot of you got jobs and stuff, and there's a lot, or you're under the PDT and you're locked out of your account for 3 days or whatever. So it's a lot of the participants in this game, I think it's just a much smaller members that are trading these than people think. I think people think there's hundreds of millions of penny stock traders. And in my opinion, there's a few 100,000. And so when you see billions of shares traded today, that's not, $500 accounts that's creating that kind of volume.
Yeah. And you know, it's amazing. I was just looking at some stats. Bespoke Premium, it's a paid service, but they put out a weekly report every weekend. And they touch on small caps quite a bit. And they've been all over just basically saying the underperformance of small caps versus large caps has been like something we haven't seen in a decade. And I didn't realize that, you know, you have Apple, Microsoft, Nvidia all over a 3 trillion market cap now. The entire market cap for the Russell 2000 small mid-cap stocks, the entire market cap is 2.99 trillion. That's insane to me. And if somebody put a gun to my head, Tim, and said either buy Apple, Microsoft, Nvidia, or the Russell 2000 for the next 5 years, I'd buy the Russell 2000. I think that there's the reward to risk. Could Nvidia triple, quadruple from here? Sure, it could. And Apple could keep going too. But the reward to risk, holy smokes, like the Russell 2000 right now, these small cap stocks, and even though you've talked about, volume coming in and it's a summer of the penny stocks, I agree with everything. But we're not even close to seeing the big move in this. There's a natural rotation of money that we will see. If you look at the ratio from the S&P 500 to the Russell 2000, that ratio, the higher it is, it means large caps are outperforming more. We're at the highest level since April 2000, 24 years. That reverts to the mean. Small caps will, I'm not saying it starts tomorrow, Tim, or 2025, but if we're looking out 5-10 years, and I'm saying this for somebody, if you have a 401k, for example, and you do these different funds, make sure you have exposure to small caps right now. Make sure you have exposure, because I think if you're just looking, the big guys, they'll do great, but small caps will outperform, and that's how you're going to make some money in this market. So I love it because we agree that my top-down approach tells me small caps, and of course you keep going much further, narrow it down to the actual penny stocks from there.
And I don't recall, listen, I read a lot, but it might have happened, but I just don't recall ever somebody of a Stanley Druckenmiller level saying something like that. Now, maybe back in the dot-com boom, I wasn't trading back then. I was building my business. We were an internet business. I was working 18 hours a day. But I just look at that and I'm like, wow, this is one of the masters of the universe, okay? So as beautiful as Nvidia is, and it's probably up 20% since he sold in the last 2 weeks, but he's like, listen, I made my money there, and I see this, back to Matt's data points, this is where the real money is, right? I already made my good, I already bought, I don't know what he bought at. He probably bought it 200 and sold it 1,000 or something. He's like, I did well there, but now he's hunting for new opportunities, and he's like, this is where I want to be right now. It doesn't mean he's going to be right. I mean, hey, billionaires make mistakes, but one thing I always like to say is you don't get to be a billionaire trader by making a lot of mistakes, okay? You'll screw some stuff up. Jim Chanos will short Tesla, okay? But guess what? He lost a lot of money on that. But last I heard, Chanos is still doing all right, Yeah,
I think he's still paying his bills. You talk about AI stocks, and NVIDIA being kind of the poster child of that. If we look back at the second quarter, kind of right now, the quarter that we're in, we look at AI stocks that fall into the 1 trillion or more. So that's a small number, single-digit number. Those stocks have a total return of 11.5% on average. If we look at the AI stocks between 1 and 10 billion, the small guys, a loss of 9%. So it's a 20% difference in a quarter. So even though they're in this AI trend, the small guys still aren't getting the love that they deserve. And that has to change, because the next big winners of AI, which is a trend that's going to last for 5, 10, 15, 20 years, maybe forever, they're going to be small people, and they grow to big companies. These are where you want to be. And for the people that say, well, I missed the AI trend. No, this is the greatest time to be getting into this right now. The average AI stock, under $1 trillion, these are still huge companies, under $1 trillion, all of them, they're 24% off their all-time high. This is when you want to buy, not at the high, when they're pulling back. So I look at all these stats. When you look at the trends we love, which is AI and technology, you look at the small cap aspect, you meld those together, holy shit, this is great. I mean, yes, I'm not picking bottoms or saying, that, Tim, but I'm saying if I'm investing for several years, you want to buy when things are on sale, and they're on freaking sale.
And that's, again, I think that's what it seems so simple, but I think so many people they want to wait. And then because they want to be right. Like they want to be right right away. And I'm like, listen, if you can be early, I mean, that's where the big money is made. And when you look at all of these data points and what Stanley Druckenmiller is doing, et cetera, it's like, this is the time. Does any, the viewers, do you realize like Nvidia was a $2 stock at one point? Okay. Like, Apple almost went out of business. Okay. Like, like they brought Steve Jobs back. Like they had to borrow money from Microsoft at one point from their competitor to stay in business. Like, and then you look back 20 years and you're like, oh, why didn't I buy Apple? Why didn't I buy Nvidia? And it's like, or AMD. I mean, AMD was a penny stock for like a decade. Okay. And now if you're, I think the standard approach is people just wait. The FOMO is too high. And now they buy, AMD or Tesla or Apple or Nvidia after it's already gone up 600%. And then they're like, oh, why do I never seem to make any money?
Yeah, it's tough though to buy early because it's not being touted on CNBC. It's not being touted in your chat rooms or by most people So you're the person walking into the restaurant when there's nobody else there, assuming the food's going to be good. And you think to yourself, well, that restaurant's packed over there. Let's go buy some Nvidia. I feel more comfortable. But, I hate to say this, most human beings are sheep. And what happened to sheep? They typically don't end up too well. The wolf gets them. You want to be the wolf, not the sheep at the end of the day when it comes down to it. I got a quick question, real quick, Tim. I got a question for you. You refer to penny stocks. Somebody asked me this weekend, he said, what do you consider a penny stock? Is it less than $1, less than $3, less than $5? So when you say that, how do you refer to that?
Great question. So, and I'm glad you asked because it gets confused a lot. So, like in the day trading world, I would say, okay, less than $10, we call them penny stocks, okay, because those are the types of stocks like TRNR went from $2 to $8 today, okay, so. It gets kind of a negative connotation, but like basically less than 10 is penny stocks to us because those are the 2 to 10s, the 2 to 20s. Okay, these stocks that make explosive moves. Now, a term that you might not have heard me use yet, Matt, is what and this is kind of common in the day trading world. We say true penny stocks. Now, true penny stocks are less than $1. Okay. And I typically avoid those because I don't like the risk to reward. Now, I know people with like small accounts love them because they'll be like, hey, look at this 20-cent stock that went to 30. That's a 50% move. And I'm like, man, I got to buy 1 million shares of this stock to make any real money. So now, again, I know small accounts love them. But for what I teach people and what I do is basically a $1 to 10 because now I can buy, I can feel comfortable buying, 5,000 shares of a $2 stock. And I don't have to buy 1 million shares of some 6-cent stock with like 4 cents of upside and hope I can get the liquidity to get out because I got 1 million shares of this freaking thing. So great question. Yeah. So my sweet spot, all these stocks I'm going to talk about in a second, you'll notice are all in that 1 to 10 window. So
okay, perfect. Thanks for clearing it up because I said under 5 kind of was my, and this is just how I view it, but I like the under 10 because for me, I have a lot of stocks in my long-term watch list that are trading between $5 and $10. It doesn't mean they're bad companies; they just happen to be trading around that level, and that's fascinating. So thanks for sharing that. And you wanted to talk about some ideas too, right?
Yeah. So now the next thing, and I think this you brought it up about being early. Now I know, like, listen, I know who used to listen to the podcast. I think our audience is evolving a lot, but I simply know from talking to people, you got a lot of small accounts out there. So. Like a lot of people are like, well, geez, okay, I like the IWM, I like the RUT, but how many, I got a small account, I'm going to buy a few hundred shares of these, and now I got to wait like a year. So, which I get because you want to be able to grow your account, you want to make real money today. So that is going to come into what I'm going to talk about right now, day trading. These hot sector stocks, in my opinion, and I learned this from Tim Sykes 15 years ago, is by far the best way to grow your account because you can catch these massive moves if you know how to trade them, which is something I show every day, and you can catch these, multi-baggers in a day. Then you get to the point where you have a little bit of account, and now you can squirrel some stuff away in like an IWM or a rut and be more patient. So some of the recent examples I want to bring up, and let me just jump back to, I mentioned Lucy earlier, and this stock, it went from the day we had an alert on it at like 50 cents, it went to over $1. And then the third day, which a day trade pattern we use is what's called the day 3 surge. And it went from 50 cents to almost $1.50 at like, a 300% move. And, I've mentioned this, many people might be members, but like one of the things that I do is I do a day trading mentorship program, and I'm live every day, 8:30 Eastern, and we go over these plays live, and we look for specific criteria. I call it the SSDD play, okay? Same stuff, different day. And I'm going to show a couple examples from the last 2 days that were literally the exact same stock. Now, I bring this up because if you know what to look for, like if you know to look for low float stocks, and I won't get a ton into float, but understand that when stocks are low float, there's not much supply. There's a couple million shares. And Lucy traded, that first day of Lucy, it traded just shy of 1 billion shares, okay? It traded 950 million shares the first day of the move, and there's 11 million shares in the float, okay? So not to get too in-depth on float rotation, but that just shows you that if there's 11 million shares out there and there's 1 billion of them shares traded, obviously there's a lot of people that are pushing this stock higher, chasing it higher and moving it higher. And then I'm going to go over last 2 days, okay, just to kind of give you guys a read. Like obviously these plays are over now, but if you go to Friday on KAVL, so this is a company that, and if you notice in the notes, I said this is an SSDD play. Micro float stock. It has ran a bunch in the past. It's manipulated by a big chat room, ridiculous volume. They had news, basically everything we look for. And I alerted that stock to, members with small accounts in the mentorship program that I run at $4.51. I said, hey, if this breaks that key level, it's going to run. 20 minutes later, it went to 8+, okay? And then later in the day, it spiked again. So the reason I mentioned that, less than 1 million shares in the float. It traded that day almost 100 million on Friday. And then you look at this morning on TRNR, which I love this one because big surprise, cool technology. There's an AI element to it. So if you check out Tonal, I don't know if the thing's any good, but it's this really cool like workout mirror, and it has like a Bowflex built into it. And all the same thing. I mean, this thing has less than 1 million in the float. They dropped the press release on Money Monday. Okay, Mondays are what we love because everybody's fired up, ready to go. Spikes up in pre, pulls back, and then retested that level from the morning in the 450s. And again, it went to 8+. So if you know what to look for in day trading, these moves are happening day in and day out. And like, if you're curious, we'll put a link below. It's called the Daily Income Trader System. I go live every day, 8:30 Eastern, and we game plan these. And then I come back at noon and we do it again. So I'm going to hand it over, kind of kick it back to Matt for his ideas. My ideas are, and maybe you've heard me say this before to the listener, like these stocks, it's the same setups, it's just different letters. Like to me, KAVL, the reason I call it that SSDD play, there is nothing, and people will argue, I'm like, there was nothing different about KAVL on Friday and TRNR today. They're exactly the same chart pattern. They're exactly the float rotation. They timed their press releases perfectly. Like this is something that repeats basically every 3 days. Like every 3 days, there's an exact stock like this. So when Matt goes over some of the longer term ideas, listen, you can dip your toe into those after you grow your account. The best way to grow your account is to day trade these hot sector stocks with flow rotation and volume and all that stuff I just went over. Because guess what? Tomorrow, especially with the market breaking out to all high time highs, there's going to be another one. There'll be another one. There's always that penny stock du jour.
Love it, love it. I thought SSD was same shit, different day, but I guess that's SSDD, huh? When you're talking about that.
That's what it is. I just don't swear.
Yeah. I was an Irish Catholic altar boy, so I swear a lot. So
well,
I'm
do
good.
Too. Like, when we're together, I do too. But like, when the camera turns on, I always feel like my mom is watching or something. So I'm like, okay, mom might be watching. It's like that Morgan Wallen song. Where Morgan Wallen's like, it's country ass shit. And he's like, sorry, mama, if you're listening. But yeah.
Yep. I understand. So yeah, that's great insights. And, I like that you explained the penny stocks weren't necessarily under $1, because that would scare me a little bit. And obviously you said you have liquidity issues because you're buying 1 million shares to make any money. So that's great that you do a little bit of everything. And obviously I'm following you in the morning since we started working together. And I will tell you folks, it's great. And if you're just doing it for education purposes, it's great to kind of start slow, but it's just education. So definitely check those out in the morning. I just came with 2 small cap ideas, Tim. One's a stock called Montrose Environmental, symbol MEG. And this is a $1.5 billion company. Interesting to me because it's in one of the niche trends that I think is going to be one of the biggest winners in the next 5-10 years. And this is forever chemicals. They're almost one of the most pure play companies when it comes to removal of PFASs, forever chemicals. It makes up right now, the remediation services for PFASs make about 12% of revenue, and they project about $700 million in revenue this year. And you think about that for a $1.5 billion company, that's some pretty good revenue. So it's not the cheapest company I've ever seen, but boy, it's got a nice chart too. It's been in an uptrend since that late October bottom that Tim had talked about earlier. But what I like about this is that they'll test the air, the water quality, the soil, and they have a bunch of patents to help remove and concentrate this waste. And really, they're kind of like the one-stop shop because it does cover a full spectrum of services. And with those patents, likely a takeover target. You see a big one come in, whether it be Republic or another waste management company that's in there. But this is a company that, if you believe in it like I do, that forever chemicals are a complete disaster, and you're seeing they're banned completely in Europe right now. There's been a big pushback to that. You're seeing a lot of bills go in front of the DC, pushing for removal here. A lot of large companies from the DuPonts of the world to others, 3M, saying they're going to eliminate it. But it's not just eliminating forever chemicals. It's getting it out of the ground. It's in our drinking water. And it's really, that's a reason cancers have gone up so high in the last 40, 50 years. So that's one. Second one is Aspen Aerogels, symbol ASPN, $2.2 billion company. This is interesting. They make kind of like insulation products. It really kind of back in the day was for oil and gas industry. Then it moved into batteries, and now it's going into electric vehicles. Just an unbelievable looking company. Its revenue this past quarter was up 107% year over year. Unbelievable. This will be their first year they're profitable, which I always love to see. Estimated 28 cents a share. However, we see earnings per share coming in at $1.10 in 2 years from now. So insane growth on top side, bottom side. Sales last year, $238 million. 2 years supposed to be $770 million. So you're seeing a company that just has insane growth. And what I love about this is we need batteries to last longer, and keep the energy down and the heat down, especially for EVs. This company takes care of that in the insulation. It's a very niche company. But again, if you look at the chart, you probably are already, Tim.
It's beauty.
Stocks, stocks, had a pretty nice run here.
Nice huge consolidation area right here. Looking like she's going to break out. Yeah.
It's up 100% since mid-April. So maybe you're chasing a little bit here. But again, 2 small cap names you probably likely never heard of. And,
I don't. Yep.
Yeah. One making money, one about to make money. So they're profitable. We're not throwing a Hail Mary for a company that maybe has zero revenue. And for all these 2 that I came up with, I probably have 100 others, Tim. And I'm stoked. I know, I like doing the penny stock stuff with you and following it, but I don't have the time to do everything. We're launching our next service in 6 weeks, and it's going to be my big picture stuff, but all real small cap stocks for the long term. Companies like this, less than $2 billion around there. So, and that's when you get the big winners. You talked about getting in early. Holy smokes, that's when you make the big money. Got to get in early and get there before anybody else is doing it. And that's you're doing the penny stocks. I'm doing with the small cap stocks here. Same thing, just come at it a different way.
Cool. Well, thank you again, Matt, and thank you to everyone. I know I mentioned this a lot on the episodes, but listen, topics, hit us with topics. Like Matt and I are very similar in a lot of ways, and basically all we do is read. Okay, like I'm just constantly reading, looking for opportunities. So keep in mind, if there's something that's on your radar, drop that in the comments, and because basically, just so you guys know, typically we record about once a week. And we do our research kind of up into that, prepare all of our ideas, etc. So I'm always looking. Like, listen, I do, and same with Matt. Like, listen, I can't read it all. We neither of us can read it all. So if you see any opportunities or ideas out there, drop those in the comments. Thank you again, everyone. Sorry if you can hear the dogs, but I got the windows open. So have a great day, Matt, and everyone else. We'll see you on the episode of the Steady Trade Podcast.